Good afternoon. Welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad, and joining my colleague Yatin, Mota. Yatin, once again, the sell-off was extended to the second day, and definitely the jitters from the Israel-Iran attack is something that the street has been grappling with. If you look at the headline indices, Sensex down with about 550 points and Nifty below that 24,750 mark. Although we were better from today's open that we saw, but for the week, we eventually did end in the red. But it was red across the board, barring your Realty and IT stocks that picked up in the last 1 hour or so. And India Wix, that jumped about 7%. And if you look at the broader end of the markets, Midcap and Smallcap indices, both of them continue to bleed. However, there was some stock-specific action that could be seen. Defense and certain shipping stocks were doing well. If you look at the oil companies, the upstream oil companies did well due to the rising Middle East tensions and, of course, because of the oil price spike. And we did see from the Middle East conflict that Israel did launch preemptive attacks on Iran, and Iran did attack with about 100 drones or so on Israel. But whether this is just the beginning of a widening conflict is something that we'll watch out for. But the key notable point, which is your oil prices, that was sharply higher today. So in just 2 days, it has seen about a 15% uptick and even topping that $77 per barrel. However, it's cooled off from its highs and it's trading around $74 per barrel at this point of time. Yatin, risk off sentiment across the market, but compared to other global markets, we still fared better. India still fared better in comparison.
Yes, I think Indian markets were quite resilient. In fact, today we were expecting a big gap down and that gap down to sustain. But after a gap down, we recovered smartly intraday. In fact, there was no big pain in the mid-cap indices also. In fact, if you look at the overall mid-cap index, only 0.5% lower. So, there was no real panic situation in the broader markets. The advance decline ratio also broadly, was about 1:3. Which was even worse, at the start of the day. So, I think the losses have been contained, buying across the board, and markets have shown some maturity and stability. In fact, as you were mentioning, certain shipping stocks were doing well, defense stocks in general were doing well. From the day's low, we had the IT stocks which outperformed the market. So, yes, across the board, we saw some bit of recovery, and many stock-specific actions were there in the market despite weak conditions.
That's right. Let's take a look at some of the top Nifty gainers and losers on that end. First up is your Bharat Electronics. Since we were mentioning that defense stocks did well today, so Bharat Electronics with about 1.5% gains coming in. Other than that, Ongc doing well with about 1.4%. Of course, all the upstream companies did do well because any crude oil price spike leads to better realization. So we can see some of the stocks doing well. IT stocks like Yatin was talking about did do well. Tech Mahindra, TCS, Wipro, all of them seeing a gain of about 0.5% or so in today's trade. And also for Nifty IT index for the week also, the sector was doing quite well, and it is one of the best sectoral performers for this week as well. On the other hand, if you look at the top losers on the Nifty 50, that includes the likes of Adani Ports with about 2.8% cut. SBI, ITC, IndusInd Bank and Hindalco, some of the top losers on the Nifty 50. But yes, mid-cap and small-cap indices once again continue to bleed, and for the week also they are in the negative territory. Yatin, what are we gathering from the mid-cap end of the markets?
So, the mid-cap in the market, we had Jubilant FoodWorks, Jubilant Ingravia and Jubilant Pharmova, in which promoters sold stake, which was worth close to 2,000 crores. So, that block deal saw some good moves. In fact, Jubilant Ingravia post the block deal moved 17%, in which promoters sold Shipping Corporations of India and GE Shipping. Both of these stocks were up anywhere between 5 to 10% on strong recovery in the shipping rates, and obviously geopolitical reasons as well. We'll talk about that space in detail in just a bit. We had DB Realty also in the real estate stocks moving by nearly 17% intraday, ended the day almost 7% higher. We have Tata Tele, Maharashtra, Irida, Indigo, all of these stocks witnessing some profit taking, 4 to 5% kind of a decline. Canara Bank also saw almost 6% kind of a decline intraday. But yes, stock specific action continues. In fact, defense stocks like Kochi Shipyard topped the turnover charts. We also had Manappuram AstraZeneca hitting fresh 52-week highs.
All right. Now let's break down some of the stocks that were the flavor of the street today. Crude sensitive stocks once again in focus today, given that oil prices did jump about 12 to 13% to about $77 per barrel. However, it's cooled off from those levels at this point of time. But some of the companies like OMCs like HPCL, BPCL, IOC, all of them were down in today's trade. On the other hand, if we see ONGC, one of the top gainers on the Nifty 50. Even paint and tire stocks, that felt the heat as it leads to increase in their cost and eventually impacts the margins also. And for paint companies also, since 50% of their input costs are linked to crude, it hampers their margins too. Now, an interesting report that did come out from JP Morgan is that they believe that the current rise in crude prices already price in about 7% worst scenario of the war situation between Israel and Iran. But they also mentioned that they expect it to spike up to $120 to $130 per barrel in their worst case scenario, and if the Strait of Hormuz closes, which is one of the key pipelines and which supplies about like 1/5 of the oil gets transits every day over there. But while they have stuck to their base crude of the crude trade in low to mid $60 per barrel, but this is the worst projection that they have given out. Yatin, now every $10 increase impacts our inflation by about 0.3%, and we did top that overnight. But the sustenance is something that everyone is watching out for, and every experts that I spoke to also said that the sustenance is something that everyone will be watching out for in the coming days.
Absolutely, but today itself, the crude couldn't sustain, 10% intraday move, even, at one point in time, crude was up as much as 12%, went low as much as only 3%. So almost a 7-8% correction from the day's high is what we saw for crude futures. Obviously, it's the weekend, Saturday, Sunday, whether or not Iran escalates from here on, versus Israel. Whether or not Israel hits some oil fields of Iran is something that we will watch out for. As of now, it seems, given the global setup and the recovery that we have seen across the board, that not a major escalation is expected, when it comes to Israel and Iran. But yes, you never know what happens over the weekend. So you will watch out, and the sustainability part is something important we watch out for. But, today shipping stocks were higher. We had Shipping Corporation of India moving 12%, we had 6% gains for G Shipping. This is because the Baltic Dry Index has moved almost 50% in the last 30 days. In fact, last 2 days we have seen a 15% kind of a gain. Whenever there is geopolitical tension, we have the Baltic Dry Index, which usually shoots up. It tracks 3 different kinds of vessel freight rates, including the Supramax. Clearly, given the fact that the Baltic Dry Index is higher, the spot rates for shipping move higher, which would mean that whatever spot deployment that you do for freights would improve your realization. So when it comes to Shipping Corporation of India and G Shipping, probably the uncontracted portion of their fleet should benefit with overall shipping rates moving higher. Also, we had, because of the geopolitical tensions, Indian defense stocks moving in trade. In fact, we had, HAL, BDL, BEL, GRSC, Mazagon Dock, all of these stocks moving anywhere between 2 to 5%. The reason being that the focus of Indian defense companies is also export. For the last 3 years, we have seen different conflicts starting from Armenia, Azerbaijan. We had Russia, Ukraine, we had India, Pakistan, and now we have Iran, Israel. And, with Europe also moving towards, a big weaponization program. They want the defense spending to move up. Clearly, across the globe, we have seen that now the demand for defense spending has moved up, which clearly supports not only domestic defense companies, but also their export plans.
That's right. Defense and shipping continue to be the flavor of the markets, and in the past 1 month or so also we have seen majority of the counters gaining about 30 to 60% itself. But yes, coming back to another stock in focus, that was your auto ancillary stocks, because that took a beating today. So we saw the likes of Sona BLW, Samvardhana Motherson, Bosch, Uno India, all of them fell up to 2% each as the sentiment was bogged down after US President Donald Trump signaled the possibility of raising tariffs on imported vehicles. Now, the move is aimed at boosting the domestic manufacturing, and it has increased the fears of renewed trade tensions and potential ripple effects on the global supply chains. Currently, if we look at the US auto tariffs do stand at 25%, but Trump's comments have sparked up speculation that they could be raised further. Now, this move would complicate negotiations which has been taking place with Japan and Germany also, and the potentially impact India's export-reliant auto component manufacturers like these two. Now, with Indian auto ancillary companies closely tied to global OEMs, especially in the US and Europe, any prolonged uncertainty or escalation in tariffs can dampen the earnings also going ahead that the markets have been fearing too. Even more tariffs from the Trump definitely adds to the worries that the auto sector has been grappling with. First it was tariffs, then again it happened with the rare earth metals, and now again an increase in tariffs.
Yes, tariffs will keep moving higher and lower and impacting auto ancillaries. But Sona Comstar, that stock was any which ways in focus, Lovisha, because their promoter Sanjay Kapoor passed away while playing polo. He died of cardiac arrest. So that stock opened a gap down like 5-7% and tried to recover. But yes, that is one stock which has been a key vendor to Tesla and has been getting impacted because Tesla sales have been moving down as well. So that stock again in news for various other reasons.
All right. That's all the stocks we have for today. Over the weekend, we will be watching our developments that is coming in from the Middle East. But with that, we have come to an end of this edition of The Closing Bell. It's a wrap from Yatin and me. Do have a good weekend, and we'll be back with markets on Monday.